Welcome everyone to the Kendall Report. It is Tuesday night, getting ready for Wednesday, and we have a barrage of things coming out. So before getting into this video tonight, make sure you hit the like button, subscribe if you haven't, and hit the notification bell. Anyway, folks, we are coming into a major entourage of all kinds of things that are going to hit. We're going to tomorrow, Wednesday, Thursday, and into Friday, we're just loaded up with lots of news. And titled this video, it's not about, this market's not about China, by the way. It's not anything to do with China. We have Powell is going to speak, and it's really about all the things that we've been hearing from all the Fed. You know, the Fed's been very present this week. They're really hyping up everything because as we come into the 13th and 14th meeting, like week after next, that is going to be the big deal, right? So everybody's getting all of the rhetoric out on the table they can. The messaging is going to stay the same. You're going to hear the same thing from Powell. You know, we're going to keep rates high. We're going to beat inflation, and they're going to keep pumping this thing out there from the standpoint of everything that we know that is what they've been telling us. You know, I think if anything, I don't know that it's good. I grew up in an age where had Paul Volcker and Greenspan, and those two guys in particular were very aggressive, and they didn't want you to know what they were going to do next because they wanted their actions to affect the markets fully. Now what happens is everything gets priced in before it happens. This started with Helicopter Ben, and it was always very nice, soft. We don't want to surprise the markets. We're going to just guide them just down the trail, and they've been doing that for years. And, you know, I think so much talk goes on about the interest rates that everybody forgets there's another thing going on behind in the background. It's called QT, quantitative tightening. They are selling lots of securities, and I think that's why we're continuing to see the front end of the market, especially the 2-year. There seems to be a lot of dumping of the 2-year. That's why the only thing that would explain the hump in the yield curve at the 2-year area, and why we're seeing the 30 and the 10-year and 5s all very much so muted in the background, otherwise downward sloping. So, you know, we saw a 447 on the 2-year while the 10-year was printing 374. It actually printed overnight 365. I looked at the 10-year just a minute ago, and we really were right at the 74 level. So 374. So basically they want us to know this is what they're going to do. I keep telling you, they want you unemployed. If you're not unemployed, they're not going to be happy because that's the only way they're going to fight inflation. So they're trying to disrupt the economy. And I saw a chart earlier. I started to put it together so I could show you, but it's really not important. It was the shipping per the basic container, the 40-foot containers, right? It's all the way back to where it was in prior to 2020. So you get this big hump where the spike in shipping costs went up. And the analogy that this analyst was making, which was shameful at best, was that everything's fine now. The supply chains are fine. And that's not what that chart reflects. That chart reflects something even more darker. This is the demand destruction. You know, China's not shipping like they were. They've been locked down. So everything is muted coming out of Shanghai. These were numbers coming from out of Shanghai and out of the main ports in China. And really what's happening is there's complete demand destruction is happening. And we know inventories are through the roof. So nobody's buying anything. So it doesn't mean anything about the supply chains. It actually reflects there's more negative connotations about this chart than there was positive. It was being played up as, oh, look, everything's fine again. No, it's not. And I mentioned in last night's video, it's interesting that transportation at least is probably that sector right now is the biggest activist on the planet to try to disrupt what a lot of folks are what we're seeing the governments do. So, we saw the truckers in Canada. We've seen the farmers, in Denmark, I believe it was, and in the Netherlands, actually. And now we're seeing potentially a rail strike. And Biden and all the guys go, nah, there's not going to be a rail strike, because guess what? The administration and Congress is going to force some bad deal. They're intervening in the unions. And supposedly, Joe Biden, Mr. Most Popular President ever, was all for unions. Now they're going, no, Mr. Union, you don't know what you're doing. You guys don't have the rights to go back to the companies and fight through this, saying we're going to do it for you because what you're doing isn't good enough. And it's we know better than you. So it's always that we know better than you kind of attitude. So it's very interesting what we're coming about. And I'm just telling you that I won't say some things. I saw some things earlier tonight that was going on in China that is just appalling, and nobody's reporting on it, of course. I'm just going to leave it at that. I'm not going to say what it was. But the point of what I'm talking about here is coming back to reality and all of the actions by the Fed. They're trying to destroy all demand that they can. And it's not a joke when I say they want you unemployed. They do want you unemployed because that's the only part of their tools. Remember, tomorrow you'll hear about how their tools, air quotes, give them the power to do whatever they, that they can just fix anything with their tools. And their tools are getting you unemployed. They're raising interest rates, and they're just going to continue to do it, folks. I'm telling you, they're not going to be happy until something breaks. And you hear comments, just off on this rant just for another minute, is what you hear is comments about the employment situation is much more resilient than we thought. I thought that was your job, right? It's supposed to be that way. So we're going to get a lot of information in the next 3 days, and it's going to be a barrage of things just about unemployment. Let's just go over what came out yesterday. We'll talk about the economics, and then I'll get into tonight's details and technicals. But yesterday we had FHA housing come in at plus 0.1 instead of a minus 0.1. So that was good. That was the prices. Case Shower came in at 10.4 instead of expected at 10.7, so a little softer there. And then we had the previous on the Case Shower was 13.1. So we're seeing prices in real estate starting to moderate a little bit. And then, of course, we had consumer confidence came in at 100.2. The prior was 102.5. So we're seeing confidence, some things start to go. But let's get to tomorrow. We've got the mortgage index coming out. Prior it was plus 0.22, so it seems to be stabilizing. I just think there's just no activity is why it looks like it does. ADP's coming out, 200 plus K jobs expected. GDP second revision 4.1% positive expected, and the deflator is expected at 4.1 as well. The prior was 4.1, so the underlying inflation through the deflator is stabilizing. And we have Chicago PMI expected to come in a contraction mode at 47.5, and then pending home sales are to come in at minus 0.52, and the prior was minus 10.2. So we've got all this stuff is the setup coming into Thursday and claims, and I'll go through that tomorrow night. But we're really seeing just a barrage of things coming on. And it was interesting, if you recall, I just mentioned this for a second. Last night, I was talking about coming down into 39.60, 39.40 level. We printed 39.41. Right now, the futures are up just a bit. We're looking at right now 39.64. So they bounced about 20 handles off of that intraday low. So hopefully some of you were able to capture some of that. When I go through the details on the technicals, you'll see there's some interesting patterns setting up here. Just a quick mention, I did do a little, I think it was 8-minute briefing right after the open this morning. I came live, just set up the algos. These hourly algos I'm going to show you have been crazy accurate. Last night I told you we were going to see a rally overnight and then a sell-off into the open, and then this on the brief, if you didn't see that, it was literally an 8-minute live stream. And I just came up to let you know what was going on. Well, they suggested about 3 hours negative, should stabilize, and then a recovery at the end of the day. That's pretty much that's exactly what it mapped out ahead of time. So it's very interesting to see how everything's setting up. And now we're bringing in some of the daily and weekly configurations. And as we come into, on Wednesday is going to be the 30th. So this is the final day of November. And on Thursday, we're starting the final quarter of the year. So there's going to be just a lot to go on between everything, book squaring up, all the window dressing, the Fed meeting, all this stuff. I mean, we're going to have a crazy end to the year. So, let's go ahead. Let's take a look at the database, get into some of these other things, and make sure I got all my notes. Yeah, we're ready to go. So let's go into the database here. So as I've been telling you over the last several days, what we're really starting to see is that the daily database, the short-term database, has peaked out. And it's we actually, even though we were down yesterday, actually, let's spin back. If we go back 2 days ago, we actually were stable to up on Monday, even in a down day. We had another down day, but we're starting to see a little bit of liquidation starting. And I've been showing you this chart over the last several days that shows you how the forward-looking part of the database looks. So what we should see is a beginning of a decline in the database as far as the number of symbols that are going to be bullish, because we're starting to see a rotation here. So we had, as we look at the overall sheet here, we're at 79.92% bullish. We had 145 buy signals, 535 sells for tomorrow's opening. So we have a slight negative rotation coming in on the short term. And as we look at the sectors now, we have two sectors that turn red over today, which one was basic materials and technology turned red. Everything else has been on for a longer period. I focused on this the other night, is that what we're really seeing is there's a couple sectors that are getting long in the tooth. Capital goods is one. We're also seeing consumer non-cyclical, and then we're getting close here on energy. Is starting to get a little long. Energy did have a bit of a bounce yesterday. We saw energy sector up 1.3. Real estate was the leader, up 1.7. But you see these sectors are starting getting long in the tooth. One of the financial is 38 of 31 days. So it's actually exceeding its average holding period. And so there's several of these sectors that are starting to get a little bit frothy from the standpoint, and we should start to see some selling. And the fact that we have this selling coming in does not mean that we're going to see any type of selling in the markets necessarily. It's not negative. I've been showing you this chart here for a number of days. I'll just bring it up again. Well, we are at the peak bullish percent on the daily, so it's going to start to decline, and the markets should still have upward surge coming into this next segment, just because of the patterns that are unfolding on the underneath the pattern. So we see liquidation of the trades that came in early, and we see a continuation of the new trades that came in over the last 10, 20 days or so, and those will keep driving the market higher. And as we come into Friday, we're at 36% bullish on the intermediate. We get above 42% on Friday, and it looks like we're going to, maybe Santa Claus is coming after all. So we'll keep a close eye on all of this as we go through the next couple weeks. So as we come into this next segment, I was talking to you about the algos on the hourly, and I'll set these up overnight. I'll try to come up live tomorrow, so watch for a really quick, just come on live. You can watch the rebroadcast of it, but I'll try to do that when I'm around. If I'm sitting here at my desk, I'll just come live, do a 10-minute or less, that just to update what these algos are looking like. Right now, there's a couple things here. This is the hourly chart we're looking at on the S&P. The algos are suggesting we're going to see the 10-period moving average start to turn up, and we have some Fibonacci projections on here right now. 39.71, 39.82, 39.89 is some targets, and it's pushing us up on an hourly chart toward the 200-hour moving average. So it looks like we're going to start to rally up into the upper 90s here, and we're not far away from printing into the 4,000 handle again. I still think there's some resistance and some things to go on here. We go over here to the daily chart. This illustrates a little better view of that. It does look like the daily is starting to suggest that we're going to hold this 21-day moving average. This is something that I mentioned to you over the last several days. I thought we would stay above the 21. A simple 21 is all you really need to use here. And as we look at that, it's 39.19 right now is the 21. And yesterday that number was 39.15, so it's going up about 4 handles per day. And you can see we do have some Fibonacci target. The minimum here is for a move to the 42.59 level. So this configuration, sitting right under the 200-day moving average, is starting to see some moderate acceleration. Over the next 2 sessions, the PPM2 is projecting to get to a 0.32. Now, these indicators actually are forward-looking. So what we're looking at right now, what the current value is right now, is it's at 0.22, which is just under trend level. So that 21-period moving average has a 60% probability that the market will stay above that right now. And the algos are suggesting over the next 2 days we're going to see an acceleration. So what that's telling us is that we're going to start to see the potential of getting back to challenge that 200-day moving average. 40.23 is going to come into play. And it's interesting because, as I just mentioned, we have a ton of information coming out over the next several days, such as, like I said, tomorrow, big day with ADP and GDP and all that. Thursday's another employment day. And then, of course, we have the big daddy coming out on Friday of unemployment numbers. And there's that's going to have a huge impact on market sentiment, especially as that will be into the final month of the fourth quarter when we're getting this information. That will be the final report for unemployment until we get to next year. So just know that's going to be a very big number for sure. And everybody's, because of the Fed and everything else we have going on, that this is probably one of the biggest numbers that we've had all year, just because of the expectation. But back to the technicals, the PPM1 is just saying it's going to stabilize. It's flat. It's actually up. negative just slightly. So the 10-period moving average is at a 0.08. Right now, there's a 90% probability for the market to rally above that simple average, which is 39.82. So look for that to get targeted. But I want you to look down at the very bottom here where my cursor is, and you'll see this is the Wavetech 200, and the PPM 200 is saying that we're going to see an acceleration to the upside as well on the 200. So it is flattening out. It's still slightly negative. It's at 0.05, which is basically means that the probabilities of getting above the 200 right now are close to 70+% at the moment. And that, like I said, that number is at 40.23. We did get above that one day, but we have not closed above it. And it looks like at least the next couple of days, we're going to have some positive as we come into the end of the week. There's going to be some positive upflow. The key thing to watch here, and I just want to emphasize this, is going to be make sure you watch what's going on around this 21-period moving average. Simple 21 will be your support level. If it breaks below that, then it tells us that we will get more downside. And the potential then is coming down to the 40-period moving average. But right at the moment, probabilities, at least for Wednesday and potentially Thursday, those probabilities are fairly low at this point in time. And, it looks like probably going to have fairly low volatility days because what's happening with the market grid is collapsing because volatility over the last several days continues to go down. This is range volatility that it looks at, and then it figures out the Fibonacci information. So we look at that, and when we start to look at what the potential is here for the market grid, 39.51 is S1. R1 is 39.72, so we printed just about to there. R2 is 39.84, and R3 39.96. Yesterday, we actually printed below the S2 number that I thought we'd print. We went to S3. That's exactly was where I think that number was 39.38, and we printed 39.41 and change, 41.50, I believe was the low. So what we're seeing here from a standpoint, and this is going to go, I always spend a lot of time here on the S&P. This is going to flow across into the NASDAQ, and the Russell actually was the better performer yesterday. Russell was up 0.31 with the S&P and the NASDAQ being down just a little bit, NASDAQ being the weakest yesterday. But the bottom line here is I want to set this up for you really good because we're sitting here right at a critical point where the market's going to potentially break out. We've seen this 200-day moving average be amazing resistance going back to last May. It was resistance again in the August rally. That was right at the 200. Here we are again. Guess what? Third time's the charm. If you couldn't probably find, everybody's talking about the 200-day moving average, how it's been a rejection. It'd be way too easy, folks, for it to just get rejected from here and go down into new lows and all that. Remember when the market was trading down at the, well, we were at the 3,700 level? Yeah, how everybody was screaming it's going to go to a new low. There hasn't been, I don't think, a more bearish tone than I've seen ever. It was just like everybody on this channel and comments are telling me I'm wrong. The market's not going to go up. Well, the market did go up, and there's more to this. And I'll break down the weekly charts as we go into this thing. But I got a little heavy in on this because basically I'm doing the heavy lifting here on the S&P, and this will flow through on the NASDAQ. So let's go ahead and take a look at the NASDAQ here. So just like with the S&P, so I've got you all set up, a little bit different configuration on the moving averages. The S&P is very, very clean right now. It's one of the cleaner analysis that I've seen for a while. The NASDAQ is suggesting that this is going to be the final day before we start to see the 10-period moving average start to move up. So that means, what that means right now, we are trading below the 10, 11,681, last trade 11,530. It says we're going to be trading above the 11,681 level. So that means we're going to rally. There is another number right around here, though. There's a Fibonacci target, 11,885, 12,362, and upper range, which gets us close to the 200, which is 12,431. So everything is still, even here on the NASDAQ, is suggesting we're going to get up to test that 200. The same configuration. Look at all these indexes. Everything I talked about on the S&P actually exists right here as well. And we're just seeing a continuation pattern. So the next 2 or 3 sessions look like we've got a pretty good probability of continuing an upward bias. Now, how far can it surge? I don't know. Maybe when we get a couple more values to come in here, these algos recalculate once they see exactly what the value is. And so what we've been noticing is that the projected value is captured about 60+% of the projected value of the next session of the next PPM reading is being captured. It's been very accurate. And so what that means is that the range here is for it to start to flatten out in the next 2 days. It's expected to see a 0.14 advancing PPM1. So 60% of that would be around 0.10. So we're going to see some improvement. What we don't know is what the markets are going to do exactly, other than looking at some of these resistance points and the patterns and what's expected to happen here. So that's exactly what's going on from that standpoint of the way the PPMs are set up. And PPM2 is showing the most power, which is really encouraging because that is at the 11,465 level. So that's going to be your key support in this pattern on the NASDAQ, 11,460. Watch that really close. If we close below it, there's some possibilities of testing down into 11,350, but the close tomorrow is going to be really important. All right, next we'll take a look at the Russell, and the Russell has a very similar type configuration here. And as far as the projected change in the PPMs, they're somewhat similar. It's not as strong on PPM2, but this is, I'm going to expand this out just so you can see this a little bit. This configuration right here is just absolutely not, how's the best way to put this? It's really not a, it's really, all the moving averages are in different directions. So this is what I call a pivotable pattern that's here. The fib target 1 is right around the 40-day moving average here, which is right at basically 1,800, 1,799. We're printing 1,839, so we're well above that. But the key level will be the 1,850 level. A break above that, then then expect to see much higher prices. And there are Fibonacci targets. A min fib target is for right now is for 1975 on the upside, and we're trading 1830. So that's a pretty big move. And what we're seeing is a swing type objective here. And I'm just going to show you what the pattern is setting up for here real quick. Let me draw this in. What it's seeing here is basically this pattern right here, and it's projecting up to these numbers up here. That's what this is doing. It's basically a Fibonacci projection off this pattern, and it's marking this pattern, and that's why the algos are all suggesting you're going to see an increase in values in all of the underlying indicators. So that would confirm at least that the expectations are there and the probabilities are there. And you folks should know this by now, I would hope anyway, but I'll go ahead and say it out loud, is markets are about probabilities, and understanding what the probabilities are is how you're going to make money. You just have to make sure you're protecting yourself. So all of the probabilities on all of these indexes are actually suggesting that we're going to see some higher prices in this pattern, and they're all setting here pretty much the same values around the 200 period moving average. If we went to the weekly, that would be equal to the 40-week moving average. And so the amount of clustered numbers at this point is huge, and the amount of probabilities pointing to it getting above these levels is also huge. Everything seems to be that way. And I guess you could even go into a contrary opinion. There's still a lot of really negative people out there and still talking about bear market rallies and all that. Maybe it is. I don't care. I always say I don't care why the market's going up. I just need to know that it is going up and know how to play it. That's all that matters. And like I said, our database is still, it's in that secondary phase on the short-term database, which will most likely trigger us in on the intermediate database to get some traction above that 0.42. And you'll have to listen to me go on and on about that when that event happens and if it happens. But for now, all of these indexes, just to summarize what we just went through on the indexes, they're all set up for exactly the same pattern, some a little stronger than the others, but all the probabilities, all the configurations, everything looked really solid here. Next, we'll take a look at the treasuries. And treasuries are starting to turn up. We saw a little bit of stability right above. This is the daily chart on the 10-year. And we're seeing some configuration here. There is a pivot at 379. So if we get above 380, we're probably heading right up to somewhere between 384, 390 again. So we should see some increase here. The algos are arguing that that's exactly what's going to happen, that the 10-period moving average is going to start to turn up. The only thing, I keep saying this over and over and over, is the way that works is we have to trade above the 10-period moving average. So we got to get above 375. We're trading 374 last I looked here a little bit ago on the overnight. So, and this is actually should be a live quote we're seeing here at 347.7. So just expect to see this market really start to move up just a little bit, not a lot. I don't see a big configuration here. After we get through tomorrow's numbers, then I think that the whole scenario of what's going to happen on the Fed meeting will start to come more into focus as we get into the numbers on Thursday and then the unemployment numbers. I think we're going to have better clarity. One second. Next, we'll take a look at crude oil. And crude oil is also starting to find some stability. We had the energy sector up 1.3. We're getting a little rebound in some of the oil stocks. And I've been arguing for a while, as long as we're above around 65, 70 on the prices, the oil stocks will continue to have a pretty good underlying support from that standpoint. But crude looks like it wants to move up. You got Brandon running around bragging about oil prices and gas prices going down, so there must be a turn if he's out there doing that. And there's still a lot of negative pressure here on crude oil, even though there's a slight uptick coming. There's still a lot of major downtrends going on in here right now. 84, 86 is pretty heavy duty resistance on oil here. As far as the support, I'll go over to the weekly chart here for a second. And what we'll see here on the weekly is, I mentioned this the other day, I think the rock bottom is going to be around this 71 level. The Fibonacci target 2 on the weekly chart is 71.76. We printed 73.60 the other day. We're back at 78 handle. I think, like I said, we'll head back toward 82, 84. There's a lot of resistance there, so we'll try to stabilize in this level here. The algos are suggesting that we're going to stay in a sideways range. All the algos are that way. The 40 period moving average is starting to roll over. This is weekly, so there's going to be a ton of resistance all the way from 98 down to about 94. So we're not really probably going to have much of an opportunity to do much to really expand anything, any kind of new uptrend or anything like that. It's more sideways trading range, probably staying at least above the 200, which is at 65, which is an extreme. You see 65, that's almost as good as minus 40 back in the day when we had that crazy negative print on oil. But this is some pretty good support here, and I expect this will continue on. And once we get some of this this action as we come into year end, I think I'll be able to get a pretty good forecast as we come into the if you can believe, I'm going to say 2023, if you can imagine that. Next, we'll cover gold. Gold's catching a bit of a bid. This is the weekly. We still have, we're trading right at the 200-week moving average, 1746, last 1765. I've been talking about this 75 level. The upward target 1 is 1765. 1820 is the next level, and that'll put us up around the 40-week. This is a weekly chart that we're looking at. The algos all suggest that there's going to be, I went through a lot of detail the other night, but basically you're going to be in a sideways pattern. Probably, I'm just going to call it a 1720, 1800 handle. So that if you're trading gold, that's going to be the place where you're going to want to try to pick your points. You know, buy low, sell high. Those are those points. The 200 is also coming like here at the 1746 level, and what I'm expecting is that we're just kind of oscillating on either side of that 200-week moving average. Finally, we'll cover Bitcoin. Bitcoin is catching a little bit of a bid here. It's very interesting. I think there's a big stream by this guy named Mario tomorrow. That they're going to have SPF on there, so they say, and it's kind of interesting. There's some things going on there. One of the things I want to point out on this is this algo has been predicting doom and gloom for Bitcoin, but in spite, once again, I talked about this before when we were over at this trading down into this level, we printed down into the 15,000 handle, and we're right back into 16 again. The resilience on the downside has been pretty impressive, to say the least. It's starting to look like not only, but that Bitcoin continues to be one of the best, I guess, the best of the best from the standpoint of being involved in any of the crypto coins at the moment. And but that's been going on. I want to go over to the daily because I think it's interesting. I was talking about this just the other day. Let me get this scaling so you can see it a little better here. Let me get rid of a couple of things here. One of the things that happened the other day, I always talk about the STX buy signals. Well, we had STX buy signal 2 days ago. This is 5 of them that we have in consecutive. This is set to show only 5 or more. So we actually had the 5th pattern come in the other day. And I showed you these algos the other day on the daily. We're suggesting that we're going to see a bit of a rally. And that's exactly what we're getting here. Let me make this look just a little better here. You can see there's probably another day or so of strength. We're above the 10 and 21 period moving averages here, and PPM1 is up at a 0.45, so we're in trend mode up here on here. PPM2 is also trend mode 0.32, so the next level on the upside is up at 18,232. So in spite of the doom and gloom being forecasted on the weekly charts, the short-term charts are continuing to be really positive here from the standpoint of this configuration. And we were seeing the algos starting to show this upward pattern going back just a couple of days ago. They were projecting up, and we're starting to get that. And we also, we do have that STX 5 buys. You can see the last time we had them was over here in June, and we got a decent rally off of that 5, and there was another 6. So this is set to count consecutive STX buy signals. What we've seen when there's, depending on the market, it goes between 4 and 5. If you get more than 5, then it's a pretty good probabilities for a low in that pattern is really good. And so we just had a 5er over here at this point in time. Yeah, I see, Gil, you're asking about this. This has not been released to the public yet. There's a couple things we're working on, and hopefully this will be out. There's a whole new suite of indicators that we're working on coming out with. But the point is, if you have the market grid, you can figure this out yourself. So you just have to count them out. So I'll come back on. I pretty much ran through everything pretty quick tonight. I appreciate everybody showing up. Hopefully, tell your friends I'm back on at night. I can tell you today was really a lot better. I'm still here around the open. It just gives me a lot better chance to get prepped for the meeting at night and have a better perspective for the next day. It's really tough. Getting up at 5:30 in the morning, markets open at 7:30, and get ready and be prepared to present something. And the other morning at 7 a.m., I have to come live at 15 minutes. I was still wondering what I was going to talk about. It just didn't feel good. So I've known for a couple hours about some of the themes that I talked to you about tonight. So hopefully you like this. Tell your friends. Let's get everybody back on board, and we'll go forward until the December 16th, which will be the final broadcast of the year. Those of you in the live room, I will see you at 1 p.m. on tomorrow, Wednesday, and we'll try to figure out how to make some money on this stuff. Anyway, folks, and like I said, if I can, I should be around. I'll come live and at least set up those hourly algos. I'm telling you, and this works on any market, not just the S&P, but and stocks in general. But that hourly chart has been golden for figuring things out. I was able to put orders in overnight where I was long, and then put orders in to sell based on the market grid, and already had a good profit waking up. So those are there's some amazing opportunities there. So the links are up above there. Just make sure you get the indicators. and it's kindlereport.com/indicators. Sign up, get them. You also get 30 days in the live room. So hopefully we'll see you in there. All right, folks, thanks for watching. I'll see you, those of you in the live room, I'll see you at 1, and that's 1 Eastern. And then I will see you tomorrow night, same time, same station. We got a lot to do this week. See ya.